Good morning, traders. It is Tuesday, April the 30th. Taking a look at the charts this morning, here's the US dollar index, and really, since the new year, it really hasn't helped with the price of equities. Last year, it was really helping us really kind of pinpoint some key pivot points as the US dollar and the SP 500 would move in inverse directions, pretty much tick for tick. Since the new year, we've kind of seen it mix. It's been they've been moving together some days, some weeks, and not moving in sync others. So really, it's kind of been more or less just a random effect of what the U.S. dollar and equities are doing. More often than not, this year though, we have been seeing stocks rise with the U.S. dollar. But really, it's still been hit or miss. So we can't really use the U.S. dollar as much of an indicator for trading the SP 500 right now. But let's just jump back to the weekly chart of the dollar so you can see where we stand. Just zooming in here to the US dollar index, you can see here we've had more or less a decent pullback. We've kind of put in a bit of a double bottom right here across a nice support zone, and it's kind of been holding up, forming a little bit of a looks as though it's put in a double bottom with a possible cup and handle pattern here. If it can find stability, it could very easily start to move higher to this upper trend line, resistance trend line, which is also if it can get up there, it'll also be a resistance zone from this previous high up here. The pattern we're seeing here is very similar to what we've seen here. Back here we saw price come up, kind of rolled over, started to look like it was going to kind of fall, and then it started to get some life and it really took off. And that's kind of where we stand right now. Excuse me. If you just look at this pattern and we just draw some really basic lines here, just delete a couple of these boxes to clean things up. If we just zoom in a little bit to this pattern, this little cup and handle pattern that's forming, if you take the top of this cup, the bottom of this cup, and more or less you take this range, this length here, if you take that and you measure it to the upside, the cup and handle could very easily push right back up into this key resistance zone. And so that's the measured move going forward. If we see the US dollar start to break out and start to rally up here, if equities move with it, we're going to see a very strong move up in the U.S. equities and in the dollar, which is very good for U.S. Trading accounts, simply because the equities you're holding will go up in value. Not only that, but your dollar that you own them in will go up in value substantially also. So that's kind of where we stand right now. The trend has more or less been sideways in the US dollar index. Again, if we just zoom back a bit, we've been trading sideways here for a few years in a very large range. It looks as though it wants to go higher, but really it's a crapshoot which way it's going to go right now. The odds are still pointing to higher prices. We still have a nice kind of up trend line here. Been bouncing sideways, consolidating, and this pattern remains to be somewhat bullish with an upward target. Anyways, let's just take a look at the SP 500. Here's the daily chart of the SPY ETF. And now you can see we had that sharp pullback. We had technicals starting to go negative. Did pierce a significant low, and it actually recovered very nicely, and it's come back up. It's now trading up near this previous high. And because it's trading up near this previous high, we're seeing a little bit more fear creep into the market, simply because the market's starting to become a little bit choppy. The market breadth is not as strong as it could be, and because we're trading at resistance, there's a little more of a chance that we could get some type of pullback or even a market top when we kind of get a meltdown to start. So with that fear rising and the US equities trading up at previous highs, if we take a look at the bond price, you can see how the fear has creeped into the market. Let me just jump to the daily chart so we're on the same time frame. You can see here fear is back up to some previous highs that we've seen in bonds back in 2012, and they've continued to creep higher and higher as more and more traders are kind of moving into bonds, expecting equities to pull back in price. And of course, when equities do start to fall, I think we could see bonds really pop and actually move even higher. But overall, right now, we're just seeing fear creep into the market, and you got to remember when the market tends to do what the opposite of what the masses are. So if everybody's slowly going into the bearish side here, moving into bonds, as equities hit resistance. We could actually see equities, because they are in a strong uptrend still, we could see them break out to the upside. We could easily see bonds pull back down to the lower end of this range, which will be this breakout zone here around the 145. So that's kind of where we stand right now. We're at a pretty critical point for the SP 500. Looking at this chart, we could easily see this chart continue to break higher, but we do have to be aware that the market breadth is somewhat weakening, and if we do start to get a crack, we're probably going to see a sharp move to the downside here, which will break a really key support zone, and then from there we could probably see some type of drift back up, probably into the midway point here. Now if I was just to throw the volume at price on, it'll show you where the majority of volume has traded. So this is a great indicator. We could, if we see price crack and really break down below this support zone through all this consolidation, through this high volume level, we'd probably see price probably drift back up after it gets extremely oversold, and it'll probably form a bear flag somewhere here. Again, this is going to be key resistance where the heavy volume has traded, and that's where the big sellers, anybody who's accumulated large positions there, when it gets back to their break even after they've had this big spook, when it gets up there, they're going to become sellers, and then from there we see price probably continue to melt down and have a fairly significant sell-off. And that could happen. We are coming into May. It is April 30th. We could easily get that sell in May, go away type thing, so we have to be aware of that. But overall, the trend is still holding up, and price is getting a little bit choppy again. So overall, we're neutral right now. We don't have any position. We're waiting for some type of pullback to potentially get long again, but if we do get a crack and a sharp breakdown, then this trend will quickly flip to the downside, and we'll be actually looking to short the market. Taking a quick look at precious metals this morning, let's just jump to gold. Here's the 4-hour chart of gold. It's forming a little bit of a bullish pattern here. I wouldn't be surprised if we see gold and silver pop probably in the next day or two. It could pop a little bit higher, push higher, break above this high. If we just go to a daily chart, which is what I posted in a post last night, kind of showing this candle here. If we just push up a little bit higher in here, we could easily see price move up, and then from here have a sharp move back down, and then it could consolidate and start to form a basing pattern for it to start to move higher going forward. But overall, this chart pattern here looks as though we're going to see it sell off. And typically when we see the broad market get strong selling, we see gold and we see gold miner stocks, everything moves down. Even though gold is a safe haven, it may not fall as much percentage basis as the equities market, but generally when everybody's selling, everybody's liquidating everything, and we usually see gold move down with the market. So we got to be aware of that. And really, it looks as though gold is trying to come up here and pierce and just push a little bit higher, and then I think we could see a sharp 1 or 2 big down days in gold as it comes back down to kind of test this high volume cluster down here before it starts to stabilize. Looking at silver, here's a silver chart, very similar pattern. Let me just go to the daily chart again. I'll keep everything kind of on the daily chart today. Looking at this pattern right here, it is forming a little bit of a pattern that could easily pop, and we could see it really go up to the 26 level. Again, we've got this inside kind of price action kind of working its way through this big down bar, and as long as it keeps trading in that bar, it remains to be bearish. It can come all the way up to the 26 and still be very bearish, at which point it could easily get sold into and move down. We'll see how things unfold going forward, but remember, everything, miners and gold, everything is still in a sharp downtrend. It's under major resistance zones on trend lines, key horizontal resistance zones. So really, I'm not looking to pick a bottom just yet. We really need to see some type of basing pattern form, or we need to see an explosive move and some type of stability, an impulse wave that shows a nice strong upthrust that can break a couple key pivot highs and then have a pause before we want to get long. Until then, the trend is still down and bounces are going to get sold into. Looking at miners, GDX ETF, all the miners, gold and silver miners, are all about the same, still in a very strong downtrend. I have a little bit of a bounce, they're kind of flagging. Really, it's nothing special. It's just like what we've seen all these other times. We're getting another we have a meltdown and then it just kind of flags. So overall the trend is still down, and if the broad market does start to sell off in May, we're likely going to see gold miners take a hit and really have another leg lower. Looking at energies real quick, here's the crude oil chart, this 4-hour chart. I'll just jump to the daily. You can see where we are on the daily chart. Kind of been working our way, ping-ponging between these lines, and we're kind of getting closer and closer into this apex. We did have a little bit of a breakdown below this potential apex here that we had going. It has broken down, it's come back into this level. Really there hasn't been any really clean kind of setups in crude oil. It's kind of been just narrowing, ping-ponging around, and it had a couple big moves where the equities market pulled back. We saw crude oil really pull back also, and it's right back into this range. So we're going to let things continue to unfold here and see what it does. In the big picture of crude oil, it's a pretty messy chart. It's gone up. It's been consolidating. It could very easily be setting up for another big move to the upside. But overall, this pattern here makes it a little more tougher to trade, simply because there's a lot of different pivot highs and lows for price to start to break out. If you were to just draw all these horizontal lines where we're going to find key stops getting run, there's a lot of levels here for crude oil to work its way through, and it's really going to just start to ping pong around between these levels, hit one, pull back. So we're just going to let things kind of play out until there is some type of a low risk setup, but until then we're just going to continue to watch it. Taking a look at natural gas. Natural gas continues to grind its way higher. It had a little bit of a pullback, started to come back on the 4-hour chart. It's had a bit of a bounce. If we just go to the daily charts, you can see that. You can see it had a 1, 2, 3, 4, 5, 6-day pullback, and then had a nice pop yesterday back up to resistance. Overall, it's continuing to work its way higher, and if we just zoom back a bit, it feels as though it's still working. We have that nice impulse wave up, just like what we've seen these previous times, and then you start to get this more choppy kind of grind higher. And that's kind of where we're at now, as things start to become a little more unstable. You start to get strong pops, strong pullbacks, and gaps, and that's usually a sign that things are getting a little bit overdone. And we'll probably see it pull back. Eventually, we'd like to see some type of bounce off a support trend line. There's a couple different levels it could be drawn depending on how you want to draw it, but they all come in a line around the same area, around the 350 area. So we'll see if things eventually pull back down to price, which will act as support coming down into this level here, which could be an opportunity to get long again. Looking at the SP 500 futures for this morning, so you can see where we're trading. This is a 10-minute chart, and yesterday morning, just zooming into in here, I pointed out that we had a series of these little, more or less all these little highs kind of all collecting, and yesterday morning we had run up and we were forming this little bit of a, more or less a little bit of a cup and handle pattern. I pointed out first run will be right up to this top if it breaks out, and then from there we could see it go up and test the almost the 16 level will be the next target. So just looking at this price yesterday, we saw a price run up, had a little pause around 11:30, and then it actually had another push up into the afternoon. In overnight trading, we've seen it pull back, flagging, very bullish price action still. It's been happening on light volume, which is good to see, and it looks as though this pattern wants to continue to go up, and we'll test probably the 1600 level today from the looks of it. Now if you just clear this chart and you look at this pattern, just scrunch it down a little bit, this is we've had this nice rounding bottom here, and more or less we've got this breakout that kind of came right across this level where you formed a little handle under resistance around this cluster high, and then we had a nice pop, and prices just settled back down. So it's broken above these highs, and now it's settling down into support, and this is a nice pattern for it to potentially have another push to the 1600. And if it does get to the 1600, and tomorrow is actually May, we could see some pretty good selling step in, and it could mark the top. So we'll see how things unfold going forward. The next couple of days are going to be pretty interesting. Overall, the trend remains up in the equities market, and we're looking for an oversold dip on the daily chart to get involved. If we don't get one, we're not going to chase price up here because it is May. market breadth is weakening. We're not going to chase it after we've seen a substantial run in the last week and a half of equities. So until then, we're just going to sit tight and we're going to let the market unfold, and we'll get involved once we get a low risk entry point. Anyways, that's it for now. Talk to you in a bit. Bye-bye.